If you're looking for the most in-depth analysis of the market, you have come to the right place. You have found Riz International, and I am joined tonight by the man himself, Rizwan Memon. How are you doing this evening, Riz?
Doing well, Chris. Thanks for having me on. As usual, it's a pleasure to be here with yourself and, of course, our lovely elite members live.
No, it's great. We have guys and gals, of course, from all across the world. We had somebody check in from Singapore earlier, and that just kind of shows you how diverse of a group we have here at Riz Elite. And if you're not a member of Riz Elite, highly recommend you check out that link down below in the description box if you're watching the replay on this. And we should be opening up membership next year, so make sure you get on that list, that early access list. You get your email notification there so we can let you know when we do open that up. But guys, let's talk about markets. Enough about that. S&P 500, right? So last Friday just goes. The last 2-3 weeks, the S&P 500 was on the biggest tear that I have seen in quite some time and hit a new all-time high, just kind of smashed through the other one like it wasn't even there. Now the new all-time high is 4,718.50. But that was the top on Friday. Monday we had some more decisions just kind of hanging around, and then Wednesday and we had a bit of a pullback, as you can see, which is not all that surprising, to be honest. After so much up, there needs to be a bit of a pullback, guys. That's healthy, that's normal, and honestly, it was not all that much, to be honest with you. If we just take a look at this real quick here, I know Riz is often, he can do these things in his head, but, just this pullback alone, less than 2%. Over a couple days, so really not all that much. A huge run in the S&P 500 here, Riz. What are your thoughts on it, and kind of where we're headed next?
Yeah, you made a good point. A pullback for now. I mean, I don't want to jinx it, but a pullback of sub 2%, less than 2%, in fact, off of a massive, rally, as you mentioned. And in fact, you can even see, as you have at the bottom of the screen, the indicator, the RSI, that purple line. It's not surprising that we saw a little bit of a pullback, if for those of you that are more inclined on technicals, that it's not uncommon to see a little bit of a cool off, a little bit of profit taking, if you will, after this overbought level in the S&P 500. And this applies to other stocks as well. But just keeping with the markets index here, Friday was surprisingly bullish, to be honest. I was quite surprised how, the pendulum swings in this market, especially. But so far, so good. We have a few positions open. In fact, Thursday, I took 2 positions, and I'll leave that for our elite members to know. And Friday, I didn't take any new positions, but I was keeping an eye on it, and it was positive for the most part, to indicate that, look, maybe the markets can carry and hold these gains. If I saw, the entire week being a pullback, I would probably be more conducive to maybe taking some positions off, maybe. But for me, I still carry everything. The only thing I got out was on Friday, was as elite members know, I got out a Wish, and that was pretty much it for Friday. But as we head into this new week, I'm keeping an eye on markets, market structure, price levels. Obviously, we have those, economic events and any kind of macro updates throughout the week. But so far, things look good. I don't think there's anything major, because a lot of people were asking me last week, which is customary every time we see a 0.5% drop, in a day, or even we see, 1% or 2 drop from highs in a week. People are like, is this the crash? And it just, I don't think it's ever going to stop, no matter how many times I address it. But just to give you an idea, everyone either goes extremely bullish or extremely bearish. There's no in between, and maybe it's the society we live in where it's all extremes. But nonetheless, I always have to throw caution in the wind on both sides. If you see a face-ripping rally like we saw, the last month of October, you gotta be cautious about that too, because you don't want to, get too caught up in thinking that this thing's gonna go, and then you just keep on upping your risk. No, I always say be trading and positioning yourself with what's happening, not what could happen, right? We want to be aware of what could happen. We don't want to just simply focus on that, which is what a lot of people do. Unfortunately, they try and become fortune tellers instead of traders. So ultimately, so far so good. I'm not saying that it's going to come back to all-time highs or we can't see a further fade. I'm not making a call on that because of course people want to know, Riz, where are we going next? And the easy answer, but the false answer and the wrong answer would be that, oh, it's going up or down, and me making a projection. That would be inaccurate, and that would be irresponsible. So my answer is usually, let's wait and see until we get more confirmation. Just what's happened last week is not enough of a confirmation to say that we're going to see a further pullback, but it's also not enough to say that, okay, well, this week we're going to rally just because of Friday's move. So it's something that I find takes some time to really wrap your head around, but it's crucial to not have a bias or try and get too caught up in like a projection type of narrative.
That's a really good point, and I think it's something that a lot of younger, maybe inexperienced traders, and by younger I mean younger in the market. Just for clarification there, because trust me, if we pick up trading later in life, you're still a young trader. It doesn't matter what the chronological age is at that point. But it is something that it is tricky to do when you have a bias slanted one direction or another. It's something that can really get you in trouble. And so, guys, if you missed that, I recommend you rewind the video a little bit and listen to what Riz was talking about there. Very critical information if you want to be a successful trader. All right, let's take a look here quickly at the breakdown here for the S&P 500. And we've seen quite a bit of consolidation here in energy after this huge bull run that we had in oil, and we'll take a look at that in a minute. But energy really kind of just stagnating here right around the plus 50%. Not that I would really call that stagnant, but really just consolidating here, not doing a whole lot. What we did see a bit of an uptick in was tech, especially on the last couple days, and couple positions of mine are doing a lot better, I will say, from this this curl up here in tech over the last couple days. Real estate and financials also still kind of consolidating here. Healthcare, a little bit of a move up, and then consolidation, and utilities still consolidating as well. So I mean, Riz, is tech just kind of pushing the market up right now? Because I'm not seeing a whole lot of action from the other sectors.
Yeah, I even said it on the last webinar. I said that I wouldn't be surprised if we see tech now perhaps take the lead a little bit, and that's not to say that it's going to now trounce and take the lead where energy is this year, but I think it could very well, as we head into the last month of 2021, be a leader in this marketplace for the last month, but by no means I think is it going to gain another 20% and be up there with energy. But and I even said last week that energy, I wouldn't be surprised if we see a consolidation. The current administration is trying to get specifically gas prices at the pump under control, because obviously that's what's hitting people directly in their wallet, and that's factoring in to their purchases and of course their spending as well. And no one wants to be spending money on gas, something that they do not see, and even though it's so critical to our daily lives, people don't see it and they don't really value it much, and no one will ever value it compared to something like a Christmas present that you could be spending your money on instead, right? So this is the conundrum that we face of physical gasoline, especially something we use for vehicles, that we never see it. We don't get to really, see the big buzz, but it's crucial to our lives, and it's another kind of product that is, I think, underappreciated, but still crucial. And no matter what, no one wants to pay an arm and a leg just so they can get in their car and drive to work or get groceries, which too are also extremely expensive now. So it's something that we have to kind of monitor as we head into 2022. I stated on my Twitter, and it's a very serious, Twitter and Instagram, what I do post, can be a mix of satire, educational, but also at some point very, very serious and to the point statements. And one that I made was about central banks, specifically the Federal Reserve, and I'll touch on that once we get into the asset class stuff.
Well, talking about seeing the big buzz with gasoline, all you really got to do is just open that container in a small room, and you'll see it. Trust me. Kids don't do that. All right, speaking of asset classes, let's go ahead and move over here. So I mentioned oil earlier. We had this huge run here starting at the end of August and just peaking out here. Looks like on the 25th at a high of 85.41 per barrel on crude. That was the most recent high, and we've had a bit of a pullback here. And again, just kind of some consolidation, some up down, really not a whole lot of directionality right now. I know, Riz, you've said kind of in the past that you thought that 80 was a bit too much for oil per barrel. What are your thoughts here with energy going forward? Or oil,
Yes,
excuse me.
yeah, I stand by that. I've said it many times, 65, 70 is, I think, the sweet spot for the time being. Obviously, this stuff changes as years go by, but I don't think anyone really, besides the actual OPEC countries, and of course the current producers that are hedged for a lower price per barrel, benefit. So obviously no one really benefits. People think, oh, the gas stations benefit with higher price at the pump. That is absolutely not true. So even the gas stations, whether it's private or branded, whatever, it doesn't matter. They don't necessarily make more because gas prices are higher. Their costs are higher. In fact, you could argue that the government actually makes a little bit more because the tax on a gallon or liter of fuel is included in the price. So it's as a percentage. Most often, every country is different, but yeah. So I assure you, it's not the end business that's selling, that you're buying the gas from at the gas station. They're not benefiting. Obviously, the consumer is clearly not benefiting when what they were paying last year or 2 years ago is the same product, comes from the ground, refined, blah blah. We put it into our car, and you hold the nozzle. It's the same product. So why the hell is it, 30% or more? That's hard. That's a hard pill to swallow. So it's something that we must be cognizant of, and that's why this current administration is every couple of days you'll hear a tidbit or a soundbite of the current U.S. administration trying or pleading, I would say, to OPEC, the oil producing countries, to up the supply, to pump more, and as a result, for supply and demand dynamics that should theoretically push prices down, which is what the current administration wants, rightfully so, because they don't want runaway inflation, which we currently have at about 6%, which is ridiculous. They don't want that, and no one does really. So it's in their benefit to have lower gas prices. I think it's in the benefit of everyone to have lower gas prices, and as a result of that, you have to have lower oil prices, right, per barrel. So will that happen? Will OPEC, actually start increasing any reasonable amount? That remains to be seen. I mean, I hope for inflation, for the individual at the pump and the average consumer, that they do increase supply, but again, it's not in any of our control. But yes, I do feel that it's 80, 75, 85, even, especially 85. It's too high. They don't think there's any reason for oil prices to be this high for now. Who knows, maybe in the next 20, 30 years when demand is lower and supply is also a lot lower, then, what we're going to see is maybe oil becomes like a niche type of product. And as a result, it becomes more expensive at the pump per se. But who knows? That remains to be seen. It's all speculation at that point.
So, I mean, other than their own personal gain, for OPEC having higher price per barrel, I mean, is that it? Are they just trying to, make more money while they can because they're concerned about all these green initiatives, or is there something else going on?
Yeah, no, you're pretty much hit the nail on the head. It's a revenue stream, right? Many of these countries, their primary or a significant part of their country's overall revenue is based on energy, and energy meaning oil. So yes, for them it's favorable because it costs them the same. If it costs them the same, maybe if it's a little bit more, and it costs them, let's assume, their cost to extract or take out the oil from the ground is even 10% higher than it was last year. Let's assume, but then you have oil prices that have gone up 30% at the barrel. Okay, forget the gas. I'm talking about the barrel. Well, guess what? That's a great increase in margin for what? That's not like they did anything. They didn't make the product any better. Still the same, crude that comes out of the ground. The refining process is the same. It's not like it's a more illustrious product. It's nothing that's changed. So it's like an increase in their bottom line for something they didn't really do per se. It's just a world supply and demand flux playing out. So for them, absolutely, they're going to try and milk that, right? Because if they pump out too much oil, they're selling more, but they're selling it at a lower price. And for them, what's the point? You're depleting a resource that they have that we all know is finite. It's not infinite. It's you know scarce. So why do that? So for them, it makes absolute sense, to keep it to a level where you're meeting demand to a certain extent, but you're not exceeding it, so that you don't bring prices down and work against yourself. So they're gonna have to be incentivized. Maybe I don't know how it works. How are they gonna do this from a geopolitical standpoint? But maybe they need some incentives, to via trade agreements or something to decrease, increase the supply, because otherwise there's no benefit. There's no reason for them to open up the taps and produce more.
Awesome. Thank you for that. And you mentioned inflation earlier. Something that's always been considered a hedge against inflation is precious metals such as gold that we're looking at here. And gold has been on an absolute tear for the last 7 trading days, all green. I know in the past we've kind of said that, gold really hasn't been behaving like a hedge against inflation recently. It's really just been kind of trading with the market. But this seems to be somewhat of a departure from that. Riz, what do you see is going on in gold?
Yeah, this is a very strong move. Does this mean that, all of a sudden gold is going to be the hedge, and like in the glory days or in the good old days? No, I don't think that's going to be the case, and it hasn't been the case. So, why bother? Or, why try and hang on to this rope that no longer exists? So I feel that, yeah, even if it, right now as we're seeing 1864 an ounce. Sure, it's great, getting close to that 1900 high. I wouldn't be surprised if we do touch it. But for me, it still isn't indicative of an asset class that I want to be traditionally exposed to. Like, 10 years ago, it was the hedge. You'd be crazy to think it wasn't. But that's what made sense at that point in time. Now, there's so many other things that, you can do with your money to quote unquote offset the inflationary pressure. So I find the average individual cannot go wrong looking at using their money that is losing value sitting there. They can't go wrong by using it productively, whether it's to whether it's in financial markets, again, so long as they know what they're doing and they have the time frame for it, or they use it to increase their knowledge or learn a technical skill or improve themselves in a way. It's a productive utilization of capital as opposed to letting it sit there and losing 5-6% in purchasing power at the end of the year. So I always say use money productively. It doesn't just have to be in markets. It can be for perhaps someone wants to pursue a passion or try and monetize something they're passionate about, or pursue a different career or technical skill set that they want to maybe provide to the consumer. And that takes some money, and that might be a productive use of their capital for them. So I always recommend that. And that is more important in times like these where inflation is having more of an erosive effect on our dollar.
Absolutely. There are always plenty of different types of, assets that you can invest in. I love your examples, education, entrepreneurship, Always real estate is another one that's always been a classic and things like that. So there's definitely lots of things that you can look into other than just securities, stocks, and bonds. Something that some people think is the second coming of Christ, for lack of a better term, is Bitcoin. Now, we are very cautious about Bitcoin here. We're not we don't have any open positions in Bitcoin. And we did this last week. And I'm going to tell you, all the crypto guys are freaking out about this right now. Okay, so let me just zoom out here just a little bit. And we kind of drew this last time. I want to show you again. They're all calling it, guys. They're like, oh, look, it's a cup and handle. It's going to do this. If you can hear my dog groaning in the background, that's kind of what we're doing here as well regarding crypto. Guys, listen, Bitcoin and crypto in general is going to be highly speculative. So please be very careful. Don't necessarily trade off of just a technical pattern. But Riz, is there anything you see with crypto right now? I mean, I know we're not really tracking it all that closely.
Yeah, we're not tracking it, but I'm not. I think we're way past the time where we discredit it or discount it as something that people want. This is what people want. This is what people believe in, and that's fine. I mean, it's proven itself over the years. I myself have traded crypto heavily, and for those that have been able to make money and continue to make money on it, whether they're speculating, trading, or they're just buying and hodling, so to speak, that's fine. That's their prerogative. But it's not something that I'm going to come in with a bias or say that I don't lean in any camp, whether it's an asset class, let alone anything else. So for me, I find that on a technical standpoint, I mentioned it. Yeah, like it's a cup and handle, and I don't really care for that pattern, so to speak. But I know some people might take it for what you will, right? Do your own due diligence and kind of make sure you are aware of the risks of buying at this level, or you're aware of the risks and even the potentials, right, of this, I would say, frontier asset class. Because let's face it, in the grand scheme of things, crypto and Bitcoin specifically is still very, very new in the grand scheme of things, right? We've had the US dollar, which is hundreds and hundreds and hundreds of years old. We have different currencies that are even older. We have dynasties and empires that have lasted, centuries. But when you compare this to everything else, even the stock market, it's a very new thing. So, who knows? Maybe in the next 10 years, we're looking at crypto at 70,000 seems like, the cheap thing, but maybe it could also be the opposite. Maybe I'm not saying it's going to come down or anything. I'm just saying we don't know. And anyone that paints a picture to you in either camp with complete conviction is way too biased or has their head up their own ass too far to be able to tell you objectively, right? The objective answer is that no one knows. So only use what you are looking to, look at as a Hail Mary, so to speak. Is this money you can lose? And is this money that if it triples, quadruples, it will have a positive impact? Sure, that's great. That's a great trade-off, right? It's known as the asymmetrical risk reward for the upside. And I think anytime you do that, whether it's crypto, whether it's NFTs, or whether it's anything really in moderation, I think it's okay. The problem comes is when it becomes sensational. It's when it becomes like a cult, when it becomes complete euphoria or mania in either direction. That's when the problems come.
It's a really good way to put it. Always, guys, and it's no different with a stock portfolio, right? We always talk about diversification, not putting all of your eggs in one basket, making sure you have multiple, different ways to, invest. It's always a good idea, and you typically will not be hurt by having multiple different asset classes that you're holding in your portfolio, whether that be crypto, whether it be real estate, or whether it be stocks and bonds, whatever you want to diversify in is definitely a good thing. Now, talking about stocks, I know, Riz, you kind of told me before we got on air here with everybody that you had a couple ideas of some things that you were looking at. Why don't you fill us in? What are you looking at this week?
Yeah, I'm gonna share 4 potential trade ideas. I know as few I mentioned last week did pretty decent, but these I'm gonna be sharing with you are also great candidates. Again, keep in mind that it also has to do with broader markets. Don't be surprised if if I'm not saying they will, if markets do pull back, maybe continuation of last week, don't be surprised if some of these stocks also go lower, right? Because these do have pretty much all stocks in the U.S. Indexes have some exposure to the broader market, so be aware of that. So first one I have is Square SQ. This is one is had a fantastic 2020, but not so much a fantastic 2021, because if you look at it, the broader state, it's been channeling in the long run for this year. So it's not a clear upward direction type of movement if you look at it over the course of this year. But with that said, you will see it shaping up nicely at around the 225, 230 area potential support. Now, what we do want to be aware of is if it breaks below, which it could, it didn't have the best of the weeks last week. If it does break below, I would not be surprised if we see 210 and then 200 area next. But that's something we want to approach and see as it plays out. They already had earnings, so they weren't the greatest, but that catalyst has come and gone. So now we need to be cognizant of any technicals, any broader market headwinds or tailwinds, right? So something to keep an eye on. Another one I have is Twitter. This one is also setting up nicely. Again, didn't have the greatest earnings, got beat up after that, and now it's in a downtrend. Absolutely no doubt it's in a downtrend, but can it now start curling up? So the risk is that if you get in too early, you can be kind of trapped in the trade, so to speak, as it starts eroding lower. You don't want to do that. So you either take a starter position, or you keep an eye on it, or maybe set an alert, or use your discretion to see what makes most sense to enter, because we could see this 51-50 area, and then if we go lower, I wouldn't be surprised if we see 49. But that's something to keep an eye on. This is not a company that I would go really big on or heavy. It's they don't really make any money, so just purely a technical type of trade. Another one is Disney. They reported earnings, not the most stellar earnings. In fact, they didn't have good earnings at all, and they missed expectations. Hence, we saw a pretty big drop. I think it was a 6 or 7% drop, which is a big drop, big move for Disney. So again, we're waiting and seeing if it can hold this area. You can see it's kind of filled the gap almost of last year, December, when they had a massive gap up. So I'm waiting and seeing if we can pick this thing up at a good price point. Again, at Disney, it's a powerhouse, and I said this to elite members that it's almost I would say, I mean, they would obviously hate this term, but it's almost as if it's like a monopoly in the film industry. I mean, pretty much everything is a superhero movie or Marvel license. It's either a sequel or origin story, and it's just nonstop, right? And for whatever reason, whether you like it or not, they are a powerhouse. So it's something to keep an eye on if it fits your trading and investing style. And of course, the fundamentals are there to back it up. Last but not least, MMM. So triple M, we got 3M, right? 3M company, obviously, depending on your where you are and what you do for a living, you have most likely heard of this company. It's obviously looking nice in terms of an uptrend after, not an ideal August and September. It's looking up. So this could be something to keep an eye on. Dividend is also coming. I think what day is that? 18th. So 18th is the X date. So if you hold a share of 3M, you could be entitled to $1.48 per share. So that's also something you can consider. And this is looking like a nice uptrend, as Chris has pointed out. So I think this is a good setup, a very different setup to the prior three, but this is more of a momentum continuation setup. So if you are feeling like you want to play this, this is another solid A+ setup. Just make sure that you have the ability to carry this, because this isn't like a big tech stock. It's not a tech stock at all. It's an infrastructure stock. And if it moves, it doesn't move 5-6% like that. It moves 1%, 1.5% at a time. So make sure you're aware of that.
Awesome, that's spectacular. Thank you for those, Riz. That is definitely giving some value out for free. And if you guys are getting value out of this, please make sure you hit that subscribe button. We'd really appreciate it if you'd stick around. Now, for all of our elite members here, now is the time for questions. We had one come in earlier about Bitcoin. The question is, isn't Bitcoin more valuable because it has a finite supply?
Yeah, so obviously that's one of the key draws of Bitcoin compared to some of these other shit coins. They do not have a capped supply, whereas Bitcoin does. I think it's 21 million or something. But again, it's not a guarantee that it's going to keep going up. At least it's a good feature to have. Anything that is a limited amount is a good feature to have, whether it's a product or whether it's anything. So yes, I do agree that it adds some value, but it by no means is the only thing that matters, right?
All right, so Matthew wants to know about Roku. Let's take a look. Ooh.
Roku. Yeah, this one's gotten beaten up. Well, it's been in a downtrend since last earnings. It's been a big runner for last year, right? This was a big runner, big benefiter of 2020 COVID situation, but not the most stellar year so far. I'm waiting on this one to actually start finding a floor as well. It's right at that critical support area, previous support around 275. So I'm keeping an eye on it. And let's see how it goes. I'm not the biggest fan of the company and the stock and the fundamentals, but from a technical standpoint, if this finds a floor and starts curling up, the momentum and the kind of bullishness, the sentiment could come in, and that's what we want as a buyer of the stock. So I personally am not getting in yet. I'm not a buyer just yet. I'd like to get some confirmation of it holding these levels, plus with the backdrop of the current market, will be important to see.
Yeah, this is a straight knife catch right now. If you buy it, there's no confirmation yet in my eyes that we've started recovering. And yeah, I have to agree. I'd like to see a little bit more of a push towards north than what we're getting right now. All right, Aman wants to know about ATVI and PayPal.
So this one, I've averaged in. They had decent earnings, but of course, with everything that they're going on with the company, I've touched on before, kind of the friction between the workforce and kind of the issues they faced, legal action from the state of California onwards. It is still there. It's still bearing on the stock. It's still weighing on it, but this earnings wasn't too bad. And of course, with Friday's large push in markets, it had a nice day. I've averaged in multiple times. I have more than a regular size position on this now after the drop. I don't have my average in front of me, unfortunately, but I do know that this is something that I'm okay carrying. But it is looking good as of Friday. If for those people that are not in, I mean, I'm not going to say after Friday's move is the best entry, because it's not, but it could still be viable. Maybe we do get a gap fill in the coming weeks, up to the 78 area. And that could be more than enough of a move for the average trader to take to participate in. So just my 2 cents. PayPal is another one that I'm on messages about. And this one is also something I have a position in that I've averaged in heavily. The earnings were decent. In fact, it's pretty crazy to me how brutalized the stock has been, because they even announced a future partnership with Amazon, and that's something that you would think would be a massive win for the stock. It would be massive in terms of potential revenue and whatnot, because we saw that the moment Affirm, which is like a buy now, pay later company, when they partnered with Amazon, it went nuts. But that's not necessarily the case. That's what's happened with PayPal. So I'm patiently waiting for the market to understand the kind of powerhouse PayPal is, not just necessarily now, but going for the future, because we know transactions and payments and everything is mobile, everything is user based. So no longer are we just conducting transactions through traditional channels like the major banks in whatever country. Now you're able to send money to someone you've never met. You're able to send money with a couple clicks. You don't have to sit there waiting for a wire, and you don't got to go through the tellers and all this nonsense at the bank. You can do it from someone who lives right beside you, as you're in your friend circle, or someone on the other side of the planet. So and of course, with news that they're also going into the crypto space and potentially even branching into the security space, meaning maybe they offer buying and holding and selling of stocks as well. That's also something that is in the rumor mill. So I think this thing, it bodes well for a carry trade, and for those not in, well, I think this is a good entry point for sure. Whether you want to take a full size position or not is up to you, but this is definitely a good entry, I feel, for the medium term and longer.
I had some follow-up questions on PayPal, and then we'll get back to our question stream here. So 2 questions. Are you writing covered calls on PayPal yet? And
Absolutely.
Okay, there you go.
Absolutely.
There's the answer for that.
Absolutely. Always. Further away from my entry, usually as a safety net. If the premiums make sense, I'll do it at my average cost. I know that most likely won't hit it if my average is very far, and I'll collect a little bit of premium. But if I want to get aggressive, then obviously I can bring down the strike. But to answer your question, simply put, yes, absolutely, I do and am doing covered calls on PayPal and pretty much almost every other position, unless it's highly speculative and it's a big mover and I have a very tiny amount.
And then second question, what is your short-term profit goal on PayPal?
Yeah, obviously it would depend on someone's entry. My entry has been, for the last few weeks, so my entry is very different even after averaging in. But I think the first, I would say, area that the stock needs to go up to is fill this gap to 225 and up. That's number one. If someone can get in now and maybe it does that, that's a great win for them already. For me, that won't be enough. I would need it to go higher. And for that, 250 area is let's just say 240 actually is a key area that I'd like it to go past, because the stock has a lot of room to recover, and it has a lot of ground to make up with what's happened over the last few months, right? It's underperformed significantly. So those are my 2 quick and dirty kind of areas to keep an eye on. The gap fill to 225 and above 240 area would be where I'd like it to get to.
Awesome. Any comments on DraftKings? Yeah, don't do it. Sports betting's bad for you. Wow, looks kind of similar to PayPal here. Someone found the flush there at DraftKings HQ, and down she goes. Earnings were terrible.
They didn't have good earnings at all, so that didn't play in, and that was kind of to be expected, because another competitor called Penn National Gaming also didn't do too well, so that was an expectation that wasn't too far-fetched for DraftKings as well, to kind of do similar and not really do as well and miss expectations. But this is a more of a technical trade. I would not buy this as a fundamental play, but it is oversold pretty much and at a critical support level, very similar to some of the other positions and trade ideas I sent. Wait for it to find a floor. These are not the kind of companies that you want to knife catch, ideally, unless you're really desperate or something, because the fundamentals aren't there. Like if you knife catch something like Apple, yeah, it might hurt if it goes lower, but it's Apple, right? You can't say the same for things like DraftKings. Okay, yeah, it's a gambling company, maybe it has great growth and potential, but it's not an Apple, or it's not a profitable company or viable right now. So be very careful getting into knife catches on companies that are more so technical trades, and this is clearly more of a technical type. So I would wait and see if it can carry this level. But a lot of opportunities presenting themselves for sure.
Absolutely. Okay, so I got another one here about covered calls. Wondering if you had any suggestions on stocks that have a decent weekly covered call premium. Gentleman says he's been doing it lately with NVIDIA, and it's been working out well.
Yeah, if you hold. So here's the way you want to look at it. if you have a stock and you have 100 shares and or more, then you can do covered calls on it. My strategy is to, depending on what my entry is, what my cost basis is, what my projection or thesis for the stock is, usually it always makes sense to do covered calls anyways. And it depends on how aggressive I want to be with it. But there's no harm in doing covered calls for the most part. Okay, unless you do it too early or you do it through a catalyst. I avoid doing it through catalyst like earnings, because although you get more premium, you can sometimes miss out or get called away when you miss the blend of the move. So if you're doing covered calls and it's working for you, continue to do it. It's irrelevant really whether it's Nvidia or it's good premiums or not. You just do it if you hold enough shares. If you don't hold enough shares, then it's not a covered call at that point. So hopefully that kind of gives you an idea. If you have the position side, you have the ability to do that covered calls, then do them.
Absolutely, guys. Either you're getting out with a profit or you're making free money. If you have the capital to do that, it's definitely a good strategy to do for sure. All right, Milton wants to know our thoughts on MQ. Had good earnings, went up a decent percent after hours, but sold off the next day because a lockup date changed. Let's take a look. Oh, okay, so this is an IPO. There's not much to look at. Yeah.
Well, look, this is their second earnings, right? This is their second earnings. Well, public earnings. I don't know much about the stock or the fundamentals, but I'm not too surprised with these kind of things. Anytime there's material change, whether it's lockup, whether it's to the board, or whether it's share offerings or anything like that structurally that can change the company's stock price specifically, it's going to impact it. So, and I find that even with the positive earnings, who knows what's I don't know what the market cap of this company is, but is it baked in? You got to understand, maybe it's not all the change in the lockup period. What if it's also the market then realizing that, whoa, wait a sec, even though they beat earnings, the stock price at this current valuation could be, at max valuation, perfectly. So you might want to consider that. Chris, you got to press the top one all the way up top. Yeah, and it will show market cap 13 billion. I don't know what this company does. It's a regional bank or something, but not something that I'm too familiar with. But just keep an eye on it. And really, with these early IPO stocks, they're trickier to trade. Simple, pure and simple.
All right, so Aman has a question. Says, with Facebook going into the metaverse, will it make it or break it for Facebook? What are your thoughts, Riz?
No, I mean, it's not a make or break it. I mean, obviously they're putting money into it, but they got to put money into something. They have enough free cash. They have no debts. They got to start investing into something. And the metaverse or this digital world that we all go into and plug into could be the next thing. I mean, who knows, right? With the way the world has moved the last few years. So no, it's not a make it or breaking thing. I think it just makes sense. What are they going to do? Are they just going to rest on their laurels? They're already a very highly negatively perceived company. This branding change is what it is. I think it's more so a branding change with the backdrop of, metaverse and this place, but it could very well be a cover up for just rebranding. I wouldn't look too much into it as at all. So I find that really I'm not too concerned about that. I just care more so about them getting their reputation in check, and that the hope is that this rebranding, so to speak, will help with that. Maybe it does, maybe it doesn't. The whole metaverse stuff hasn't played out. It's way too far ahead to be able to even value that as a good or bad thing, or kind of factor it into the company's profits or potential revenue going forward.
Awesome. All right. Manuel says BBY overextended, short candidate. I'm going to go and say no, because shorting now. Oh wow. Okay. Yeah. That you're not kidding on overextended, but yeah, I'm not shorting this.
Yeah, when it comes to shorting, right? Like it's crazy. It's crazy. Yeah, it's been a crazy move, an outside move. You would say it could revert to the mean. I know. And Manuel says, okay, look at that, but. Yeah, trust me, if I had $1 for every time I said, look at that, Um, I don't know. I would have bought two McLarens or something. I don't know. But the point is, yeah. I mean, this shit's just fucking stupid. I don't fucking short. If you've noticed, ever since January, I haven't shorted any stock, and that's a fact. Um, so that's my personal thing. Yeah, by all accounts, we can assume that it should revert to the mean. Around 116, even 120. But do I want to be on the other side of this asymmetrical trade that is against us? Anytime you short, obviously it's an asymmetrical trade against us because the risk is theoretically unlimited because the stock could go from 125, 135 to 150, 160, 200, 250, 300, 500, who knows, right? So it's unlimited risk theoretically. So if you really, really, really are feeling feisty, take a look at puts if you really want. At least you know how the max you can lose.
Yeah, I think puts would be a lot more safe than holding something short like this. Guys, you don't want to jump in front of the freight train. And right now, Best Buy is a freight train. I don't care whether it's overbought. I've said it before on webinar. Riz has said it before. Stocks can remain overbought or oversold for some time. It is not some magical, line that once it hits an area, it just reverses. It can just keep going. And you do not want to be on the wrong side of that, especially if you're holding short. Aman is talking about his covered calls that he missed on any GG gains because of aggressive covered calls. Yeah, that can happen. Let's take a look.
Yeah, and that was stupid. But look where it settled, right? Yeah, it's not. I wouldn't be too surprised. It's fine. You made money on the covered calls, anyways. No one could have predicted this kind of move. So you know what? It's just Wall Street bet literally taking over one day, and then guess what happens after that? It's just
over.
It's still higher. It's still higher than where it was around the 12 area, but no one can really predict that to happen, right? So yeah, it's not a big deal. You could literally just do short puts on it if you really wanted to take the opposite side. But to address also what Jazz is saying about buybacks, yes, Home Depot was similar, Best Buy similar. Yes, these buybacks are a positive thing for the stock, for the company, and obviously specifically the stock. But yeah, it's not something you want to be on the other side of.
All right. So this is a interesting question. Are we eyeing any Metaverse stocks for long-term holds?
Yeah, good question by Matthew. I personally do not. I know a few of our team members who do look at a little bit smaller caps, a little bit more speculative companies. There are some. There's no metaverse quote unquote stock, but there are certain stocks that have exposure perhaps to metaverse. It could be the production of the technology, like in order to make the Facebook Oculus, you would have to do your due diligence. I'm sure there's some companies that are prime for benefiting from it, but you gotta know it's like buying lithium companies because we are living in an age of the electrical vehicle, and in order to get the batteries for those vehicles, lithium is needed in those batteries. So you're like, okay, let's go buy lithium companies. But not all lithium companies are standing to benefit because there's so much more competition. And when there's more competition in an industry, it doesn't necessarily mean the profits are higher. It means the profits and the margins are spread out, and the margins can actually go down. So who knows? Usually when these things happen, um, it's not easy as, oh, let's buy something that fits in. It can work out, but you got to make sure you pick the cream of the crop, because just like any industry, whether it's the weed industry, the marijuana industry, or anything really, you got to pick the cream of the crop, and even that, you can have the entire sector get um, uh, pummeled, and there's no better way to explain that than you know the weed sector. ACB is one. There's CGC. They're all they're having a nice run right now, but compare that to where they were, it's just like, Chris, double click on the pane there on the right side where the price, double click on it. Just look at that. Like, tell me You could buy ACG, ACB, CGC, pretty much Tilray, anything. It just so don't be fooled by hype. You got to pick the stalwarts. You got to pick the key ones. It's anyone's guess which one that is.
All right, now this is a great question. I think this will be a good one to end on since we're getting pretty close here to time. Question is, recently company valuations have been somewhat rich, looking at Tesla, Nvidia, Lucid, Rivian, etc. How do you determine if a company is overvalued or undervalued?
Yeah, so I look at many things. I cover a lot of this in the masterclass, Stock Trading Masterclass, but Nvidia is something I wouldn't classify in those companies. Yeah, it's richly valued right now, but obviously it's a phenomenal business in the right industry and the right time. Whereas when you look at things like Lucid and Rivian sold 156 vehicles recently, and it has a valuation of about $123 billion. If you do the math, that's nearly, it doesn't really matter. That's nearly $1 billion in market cap for every car they sold. That, yeah, I get it. It's not that simple. There's future, there's potential in the long run, blah, blah, blah. But give me a break. And people still ask me, Riz, why would you not buy Rivian? I just find it so fucking pretentious when people ask me these questions. Why would you not buy Rivian? As if they're on the board of the shit. Like I just blows my fucking mind that people ask me in a condescending manner. If they ask me in a genuine manner, like, Riz, what about Rivian? What do you think? That's a different story. But if they ask me as if I am a moron for not buying Rivian, and I mean, I don't have anything to prove to anyone, but really overvalued, overhyped is an understatement with some of these companies. I'm not even going to start on this Tesla hype train bandwagon. It's another fucking cult.
Well, Riz, why wouldn't you buy Tesla? I mean, why wouldn't you?
Why wouldn't I buy it at 1,200? I know, right? Like, I mean, and those people go really quiet really fast when Elon sells 5 billion worth, right? That too, when it was already predetermined in September as per the filings that he was going to sell. So who's the joke on? The average cultist or the market or the regulators? I don't know. But really, it was already predetermined that he's going to sell stock. We already knew he has a lot of options that are exercising. And I mean, they have to be exercised or they're going to expire. So he would have a big tax bill to cover. And obviously, if I were him, I'd do the same. I'd sell. But obviously, Elon's a little bit creative and a very different person. So you know what? It's not surprising that he sold a bunch of stock. It makes sense because his compensation is all stock. He doesn't really take any salary and whatnot, and kudos to him for that. But I don't understand any euphoria with anything. I don't care what it is, and whether it's Rivian, Lucid. Fucked if I know it. It's just stupidity, and I can't justify certain types of things. As a trade, if someone wants to set a very tight stop and see if it can run, and I'm talking about Rivian, RIVN, then sure. But to imply that, Riz, why don't you buy Rivian at 120 billion market cap when they sold 156 vehicles and their projecting revenue is, here's the key, okay? The projected revenue in the future year is $0 to $1 million. I can tell you right now, I make more money just trading than Rivian does as a company. So you don't see me, well, why wouldn't you buy Riz International?
If that's not erect right there, I don't know what is.
They'll probably blacklist me or some shit for this, but I don't care. Probably gonna hurt a lot of people's feelings when they watch this, but I don't give a flying fuck. So be it, and this is a fact. I make more money than fucking Rivian and many of these companies on the financial markets, but it doesn't make it right to have these kinds of valuations. And of course, it benefits the shareholders, it benefits those that got in pre-IPO, it benefits the founders, it benefits the employees. So that's great for them. But to align some kind of bias and cultish type of behavior or euphoria or mania around a stock, and a stock like Apple, I would understand. Microsoft, Amazon, I would understand. But a stock like Rivian, yeah, I don't know. Like a stock can go up, it could go up. I don't care. But there has to be something underlying to fall back on. And I think in this generation, with the newer traders and investors over the last few years, again, newer has nothing to do with age, just in terms of market experience. Of course, they're new and they think what goes up continues to go up and should go up, when they don't realize that given it enough time, um, usually things always revert to the mean. They usually settle. The reality is somewhere in between. It doesn't mean Rivian's worth nothing. Doesn't mean Rivian should go to zero. It doesn't mean Rivian is a bad company and doesn't have any future potential. It just means that at right now, at this current valuation, with the current information we have now, it is hype, it's overvalued, and I think it's frankly irresponsible. I mean, people can do what they want, but I think it's irresponsible to say otherwise, that it is an overvalued company that's hype and it's in the right sector at the right time for sure. Just like weed was the thing back in 2018, if you recall, Chris. But doesn't mean, you can go out and say, oh, buy every weed stock and buy as much as you can and mortgage and second mortgage your house and, just, and look how that shit turns out, right? So, I've seen enough. I've seen enough. Whether it's the elite family or whether you're watching the recording after the fact, I've seen enough in my 30 years of life and my 14 years of trading, over 14 years now, markets, that maybe it means something to people. Maybe it doesn't, but yeah, I make my decisions based on many things besides just hot topics and hot stocks and recent IPOs.
Well, with that, guys, I just have one condescending question. Why wouldn't you want to click the subscribe button right now here on YouTube? You should definitely do it because, guys, we're going to be giving you more and more content here in the future. And, of course, once we open up our our membership again to Riz Elite, highly recommend that you get in on that if you're not a member already, because you're going to get even more inside information than what we are telling you here on the public webinars. So really appreciate all of our elite members who keep coming out to this. Absolutely amazing questions tonight, everybody. Thank you so much for being here. I really appreciate it. And of course, Riz, thank you for coming in and sharing with us your wealth of knowledge and wisdom as in terms of markets, setups, and things to look for.
Thank you for having me. It's a pleasure. I hope you guys enjoyed this. I said it was going to be a banger. I said it was going to be different. I hope you got some value out of it, just besides the regular just stocks and charts and stuff. I think there's more to life than that. So I was trying bring in a little bit of extra spice to it. So yeah.
Variety is the spice of life, my friend.
All right, guys. Thanks a lot.
Thanks, everybody. We'll see you on the next one.